Welcome to the Toronto Real Estate Podcast. Today, we are addressing a pressing question. Is the Toronto real estate spring market already over, and are we entering the dog days of summer? The spring market, which generally runs from March to the end of June, is a peak period in Toronto real estate. The improved weather, longer days, and at the end of the school year encourage families to move. During the traditional spring market, we typically see an increase in listings, offering more choices for buyers and creating an influx of activity with buyers jumping into the mix. We question whether the season has already come and gone, and more importantly, did it ever really start? To explore this topic, we've gathered some of our experts at Fox Marin. Today we have Jerome, Jessica, Ruben, and Ian Busher joining us. Join us as we discuss this topic and uncover what's happening in the Toronto Spring Real Estate 2024 market, boots on the ground. My name is Ralph Fox, and I'm the broker of record and co-founder of Fox Marin. I look forward to sharing our team's perspective on this. So let's get started. Jerome, so great to have you join us here today. How are you?
I'm doing great, Ralph. How are you doing?
I'm doing really well. Anything high level you want to comment on before we commence this discussion?
Good weather outside. It's nice seeing properties right now. Buyers are excited. We'll get into some data, though, that might refute some of that sentiment that I'm seeing boots on the ground. But I'm looking forward to chatting about this.
Okay, so let's get into it. So what are the key trends right now in the Toronto real estate market this spring? And how do you compare this to the last few years?
Yeah, so inventory levels are pretty much a record high, or 10-year highs, I should say. I think there's a number of factors that are weighing in on that. If you break it down, condo and freehold, keeping those two separate, we saw record months of inventory, like super slow market in the fall. And I think a lot of people that had considered listing in the fall said, you know what, let's hold off. Let's wait for better weather. Let's wait till we're closer to the likely first interest rate cut in spring, summer of 2024. And so we're seeing a lot of listings kind of pile up on the market in the last month and a half. And for condos, we had kind of a curveball thrown with the new federal budget and capital gains implication. I think a lot of people are overblowing it, given that really there's only an impact if capital gains is higher than $250,000. But all of these are kind of piling up, and we're seeing a lot of properties sit on the market right now. Depends on the market segment, but in general, things are moving quite slow relative to springs past.
What's really interesting is we did see a really big, stronger than expected push in January and February. And a lot of the carryover properties that weren't able to sell in the fall, especially the ones that we had, all sold in January, February. And there was this huge wave of optimism at the beginning of the year that seemed to sort of peter out and lose steam as the months progressed. And as we got into what is the traditional spring market, the market really did sort of peter out a bit. And we haven't just seen, which is really interesting, a buildup in condos, but from what's more interesting to me is the buildup in inventory on the low rise, because we're seeing that starting to climb month over month in a way that just typically doesn't happen in Toronto. So is that just an aberration of a couple months, or is this a trend to come, is a really interesting question. And I think interest rates will play a lot into that discussion.
Yeah, I have a theory. This is an armchair theory because I have no data to support this. But I think one of the biggest hiccups we saw in inventory last month was detached homes. I think active listings were up 40% month over month from March until April. And my guess is that since we're now 2 years into interest rate hikes, the implication of that on people that stretched for the largest home they could possibly buy back in 2022. Some of those people might start to be feeling the crunch, and the economy slow right now relatively. People are finally feeling the impact of that. And the Bank of Canada announcement on June 5th, there's a lot of eyes on it and a lot of people looking at their monthly cash flow to figure out how long they're going to be able to hold on.
One thing that was really interesting and atypical for the month of March was the way all of the holidays stacked up. And so it was very treacherous when you were looking at that month, because every week almost it felt like or seemed like there was a major holiday, which typically doesn't happen like that in the month of March. And so because of that, I think it put a lot of pressure on the market that typically we don't see during that time period. So again, it's really interesting to see, is that an aberration or is that a long-term trend? But one of the things we do see on the detached and semi-detached side, the low-ride side, is a lot of the buyers generally seem to be coming in with heavy deposits and seem to be a little less affected by interest rates than your typical condo buyer. And so I think that's why we've had the discrepancies of the two market. But it'll be really interesting to see how things play out. And no matter how much you look at the data and then try and forecast, chances are you're going to be wrong right now, because there is no precedent for what we're going through in terms of the economic climate. Okay, so moving along, Jerome, what is the current inventory level in the Toronto market, and what are we seeing more properties being listed this spring than in previous years? What is selling right now?
Yeah. So if you blend everything together, low rise, high rise, or you could call it front condo and freehold, inventory levels are about 40% higher than the 10-year average for April, while sales are just over 20% lower than the 10-year average. So you add that up, and that's where you get your stretched out months of inventory. Freehold is sitting at just under 2 months of inventory. Condos are moving twice as slow at just below 4 months of inventory. So there's a massive discrepancy. And if you go back to the previous years, you go back like 2017, 2018, that was actually flipped, where condos in April were quite often sitting in the 1 month of inventory segment, and freehold was moving slower. So everything's flipped. It looks like the buyers that are out there active right now are primarily end users and trying to scrap and claw to get into the freehold market, particularly for first-time home buyers that don't want their first home on the property ladder to be a condo.
Yeah, definitely in low rise, anything below like 1.3, 1.4 is definitely still very aggressive in terms of the amount of activity that we're seeing. As you progressively get higher above 1.4, you definitely start to see that peter off. And then in the condo market, I think the real issue is that you've got a lot of investors who are just putting tenanted units out, being like, I'm paying $700 a month or $1,000 a month extra. It's tenanted. We're getting rents. Let's just put it on the market and see what happens. And you got a lot of those type of properties that are sitting. When condos do sell or have solid prices that the sellers are receiving, generally they are vacant and staged properties where an end user, meaning somebody who's purchasing it to live in it, not invest in it, because investors have all but disappeared from the condo market currently. But those end users looking at those empty units, those generally are the ones that seem to be selling. So really interesting to see how this continues to play out, all of which interest rates is definitely having a big impact on. What are you seeing with the influx of first-time buyers? Are you seeing more experienced buyers? Like in terms of who is active right now? I know we talked about that a little bit, but what are you seeing? Like what kind of conversations are you having with your buyer clients?
You know what? I wish there was data for this, and what I can work off of is like conversations. And
yeah, no, I don't want data. I want what your conversation. This is more valuable because it's real time and it's experiential.
Yeah, I mean, generally first-time homebuyers tend to move in sort of a herd mentality, and FOMO can often be the biggest driver.
True.
Where more seasoned real estate buyers or people that have owned real estate for 10 years, they understand timing. They don't get caught up in, oh my God, I might not be able to afford this. And when first-time home buyers kind of like, I'm thinking about buying a home, what really kicks them into gear is when they see average prices rise quickly, and you start to see media headlines of prices going up at an unprecedented pace and months of inventory being super low. That mentality leads to, oh my God, I don't want to get priced out of the market and be stuck in a condo. I got to get in this $1.3 million semi-detached home in Greenwood and Dundas now, where I might not be able to. That hasn't really happened yet. And I think that a lot of people are looking at the interest rate announcement coming up on June 5th and saying, oh my God, if it holds steady, what am I going to do? If it goes down by 25 bips, what am I going to do? And a lot of those first-time home buyers are sitting on the sideline. And I promise you, once FOMO kicks in and we do see prices take off, which I believe will happen, even though we're at high inventory levels right now, I think we're going to see a crush of first-time home buyers change their mentality about this and kick into action mode. Somebody on the other side of that, somebody that's more seasoned, downsizers, for example, they're sitting around, they know that their house is worth, call it $2 million, and they want to downsize to a townhouse that's going to be, 1.2, $1.3 million. Those types of buyers are a lot more particular about what they're looking for. And they're going to sit and wait, and they're going to buy first and then sell. And they don't feel, they're not as price sensitive, I guess, as the first time home buyers, because if average prices are going up for their purchase, they're also going up for their sale. So for them, they're patiently waiting. If the right opportunity comes up and the stars align, they make a move, but they have no pressure to do that other than, I don't want to clean my big house anymore once my kids are gone. So as of right now, absorption rates are both high for freehold and condo. First-time home buyers not going to rush to buy until we see that shift, but just wait a month or two, and I think we're going to see a flood of first-time home buyers come in once inventory levels start to drop.
And Jerome, I know you have a few clients in the luxury market, several even in the ultra luxury market. What are you seeing right now on that side?
Still very slow. I've seen a lot of properties sit on the market for 6 to 12 months that, if we're in different market conditions, would have been gone within 1 to 2 months. And that creates a mentality for buyers in that market of, I'm waiting for something that's turnkey. I'm going to wait for something that's absolutely perfect. And if I don't find it, so be it. If we're in different market conditions, lower inventory levels, days on market, way lower than they currently are, that mentality shifts more to, okay, we can buy this. It's like 80% good. And over time, we can renovate and turn it into what we want. But with inventory and sales moving at the clip they are right now, which is quite slow, a lot of people are being a lot more picky, which is completely fair, and they should be. They have no pressure to make a move, but it forces buyers and creates a situation where buyers become very, very picky in that end of the market.
But there's less conversation about Bank of Canada rate announcements, I would presume.
Yeah, I mean, in that market, people are putting 30, 40, 50% down. So they're less sensitive to pricing, to interest rates rather.
Okay. And let's just wrap this up here. How are overall clients currently reacting to the interest rate environment and upcoming announcements? What is the sentiment and behavior specific to that type of sensitivity?
We'll talk condo investors first, because that's a pretty big category, and it's kind of the tip of the spear for implications of interest rates. There's a lot of condo investors out there that bought pre-construction and just closed, or bought within the last 5 years. They're on a variable, and they're really feeling the pain. They bought their properties at negative cash flow, and now they're like really negative cash flow, like 50% negative cash flow every single month. That's who's feeling this the most. That's who's going to be paying close attention, refreshing their Globe and Mail app on June 5th nonstop. That's who this impacts by far the most. People that are end users, everybody's talking about it and wondering what's going to happen. If somebody's not as seasoned buying real estate, I think for the most part, the sentiment I'm seeing is they're kind of overhyping the implication of this announcement. Even if Bank of Canada cuts by 25 bips, I don't think we're going to see an overnight shift where prices suddenly rise 5 or 10%. I think we're going to, based on the inventory levels, it's going to take a little while for all of that to clear out. The real implication, if there is a cut, I think is going to take a few months to play out. I don't think it's going to be an overnight shift.
But the one thing to understand is, while the difference in your payments will be nominal, it's a clear signal to the market that the Bank of Canada now feels that the interest rate increases are over, the pause is now over, and it's just a question of how quickly the ride down is going to happen. And I think that type of signaling will have a far greater implication on the market than actually how much a quarter basis point is going to affect somebody's payments or future payments. Yeah. And that's really what people are watching for. It's just like, okay, just tell us this is the end and we're starting to move down. Then people can start to figure out, okay, well, this is the highest it's going to be. So if I lock in now, or I get a variable now and ride this down, I'll be able to take advantage of future price increases, would be the thought process, I think, of a lot of potential buyers who are out there. Whether they actually reduce on June 5th remains to be seen. I don't think they will, unfortunately, but we shall see.
Yeah, buyer sentiment moves a lot more with headlines than they do with actual data. So I agree. I think the hype around it is honestly more important than what actually happens.
Yeah, there's nothing more emotional than Toronto residential real estate.
True.
Anything else you'd like to add, Jerome, before we wrap up?
No, I'm excited. I mean, I've got a lot of buyer clients out there that are getting close to finding something that's perfect. And if you're a buyer out there, stay educated, go see homes, make sure you're tracking things, and things will work out well for you.
And if you don't have an agent, call Jerome.
That's right.
All right, Jerome, thank you so much for joining us today. And we look forward to having you on the pod again.
My pleasure. Thanks for having me.
Okay, great. Next up, we have Ruben Labovitz. Ruben, so happy to have you here so you can join us in this discussion today. How are you doing today, this fine morning?
I am fantastic this morning, Ralph. How are you?
Good. You look fantastic. So
Thank you.
Great to have you in a fantastic frame of mind to talk about our topic of the day, the Toronto real estate spring market. Ruben, what are your high-level thoughts on it?
Yeah, I don't really know if we've had a spring market.
Yeah.
I think that's my initial thought, kind of high level. Maybe there was a little bit of a glimpse in February, but typically you see kind of a run up from February through May. And we've gotten a little bit of that this year, but not nearly as drastic as we've seen in previous years. And quality inventory, buyers, I would say expectations and mentality are not really the same as we've seen in previous springs.
Yeah, I was talking about this with Jerome earlier, and I was saying how strong the sentiment was January and February, and it felt like everything has just sort of fizzled out as we've progressed in the last couple months, which is the antithesis of what the spring market generally is. And January, February was like, wow, if we're this busy now and there's this much sentiment and activity, it's going to be a really busy spring. And it definitely has seemed to fizzle out. Do you have any thoughts as to what happened? Like why we had that little brief burst of optimism and then it sort of petered out? What do you think was behind that?
I think really the main driver behind that was at the beginning of the year, kind of all throughout the fall, everybody was targeting March as the date for a first interest rate decrease.
Yep.
And when that didn't happen, so I do think that there was a run up in sentiment and activity January, February, maybe a little bit more even than we're used to seeing, because a lot of people wanted to try and get ahead of that. When that didn't happen, I think people kind of just got tired. And they thought they were doing everything right. And then when the bank held flat again, I think a lot of sellers decided to hold off and kind of just sit on the sidelines and wait. And as a result, unless people were moving and looking to purchase for what I typically call like situational moves or situational purposes, then they're also waiting for more quality inventory to come online.
Tired is such a good word. I am so tired of talking about interest rates. I'm so tired of thinking about interest rates. It was funny because we did a podcast. I can't remember. It was 2 weeks ago. And somebody just wrote in the comments, I am so sick of talking about interest rates. And I think I was talking about that in the podcast. And it'd just be nice. I can't, like prior to 2 years ago, and I think about this a lot, is like how nobody would wait for a Bank of Canada rate announcement. Nobody knew when it would happen. It was never headlined in the news. And now, Tiff, the president of the Bank of Canada, passes gas, and all of a sudden it was like, what did he mean when he did that? What type of gas was it? Like, what ramifications is that going to have? Like, when he said if and, did he really mean if and? Was it dovish? Was it hawkish? What does the tone mean? I'm just so sick of it, and it'll be so nice. This is 2+ years of this at this point.
Well, I think a lot of people would be better off, both buyers and sellers, if they tuned out a little bit what was going on and just bought and sold based on necessity. And I think that would really be beneficial mentally for everybody.
Well, and I think that's what is happening, as you were saying earlier. They're buying or selling by necessity, by situational, whereas the more optional buyers, somebody who's renting a condo and could buy it anytime, or somebody who's looking to get into the market but doesn't have to get into the market, or investors, or people at the higher end of the mid-range end of the market. They're the ones that seem to be sitting on the stoop trying to read the tea leaves. And going back to your point, which I'm in firm agreement with, is that anybody who's tried to predict anything, myself included, has basically been wrong about everything over the short-term predictions over the last year or two. So you're never really going to outsmart the market. Don't even bother trying. And I think it is pretty great advice to just make the best decisions for you in the moment. And, you know, I think we all can agree in a few years from now, prices probably most likely will be a lot more expensive than they are today if you fully understand the fundamentals. And if you understand that, then trying to predict the day-to-day is going to be really, really hard, stressful, and mentally taxing.
Agreed completely.
So talk to me about inventory levels. Like, what are you seeing in the market?
If you look at the market as a whole, compared to last year, inventory is actually up significantly. But if you take a look at, say, March, April, from the previous 5 to 10 years, we're kind of right in line with inventory, like average inventory levels over that time. What I think is interesting and important is that you really do have to separate condos from freehold houses, and condo inventory is incredibly high, and that is what is pulling just overall inventory up year over year, while freehold is kind of normal or even a little bit lower.
Freehold is starting to stack up. That's the interesting thing. And we're talking about that with Jerome in the previous segment, is seeing that over the last month, not a trend, but seeing that is something that's very interesting to see in terms of the low-rise section and something to keep our eye on.
Yeah, absolutely.
Here's a question for you, because I know you're really active and you see a lot of properties for all of our clients at all ranges of price points. This is anecdotal. And I think a lot of the real-time data, like when Treb or whoever puts out data, it's all lagging information. So I think that's why these type of conversations are so important, because they're based on real time. What about quality of inventory? Because it's such an interesting question, because you can look at data and data can be like, oh, well, there's all this inventory coming on the market. But like, it's very hard to track, are good properties selling, or is it all just the junk that's been accumulating that's sitting on the market? Is it just tenanted properties that's sitting on the market? Based on what you're seeing versus past years in terms of quality of inventory, have you seen any differentiations?
So that was going to be my next point, in that I think, and from what I've been seeing walking through properties, one of the reasons for a buildup of inventory is the lack of quality inventory. And a lot of what is out there is just kind of crappy, whether that's a condo, whether that's a $2.5 million house. On the freehold, a lot of what's out there is very, very run down and would need a lot of work to kind of get it up to modern standards. And then in the condo market, it could be a poor layout. It could be in really, really rough condition or tenanted. That being said, while I do think that is the brunt of what is coming online, there are still some quality listings that, for one reason or another, are struggling. And I don't have an explanation for. I think you can have one great property on one street that'll get 5 offers on an offer night and kind of sell in range. And you could have a property a block over that may be of equal quality and value that might not perform as well. And so I do still think that, and I think that comes down to more of the situational buyers versus everybody trying to get in and to do something, is that there's a little bit less, I would say, reasoning behind what is selling and why.
Yeah, and I agree with that. And on the listing side, when we're talking to clients, there is no such thing as a guaranteed sale anymore. And there is no such thing as a slam dunk when you're talking to clients. Everything has to be really, really carefully thought through under the guise that this still might not sell despite all of our best efforts. Knowing that in any other time, at least in the last 17 years in the Toronto real estate market, a lot of these types of properties that we're having these conversations with currently would have sold without consideration. And
Absolutely.
it is interesting, as one of the things that we say on the buy side to our clients is like, this is an opportunity to buy a house that you actually like, or to buy a condo that you actually like, versus in a typical Toronto market situation, buyers are just trying to get whatever they can and figure out how to make it work, or make the trade-offs, or figure out to renovate at a later date, just get something now. And so there is a tremendous opportunity for buyers that typically doesn't exist, or hasn't historically for a very long time, in the Toronto market. Who are the primary buyers right now that you're seeing? And are we seeing an influx of first-time buyers, or like what type of buyers? Who's active right now, and who's not just active, but is actually buying?
Yeah, I think we've touched on this a couple of times, and I don't know if it's necessarily one segment of the market, but it's rather the people that actually need to buy because of a change of life circumstances. So whether that's a job, a relationship, kids, that is really why people who are looking, for the most part, are picking right now as a time to look for a time to purchase property. That being said, I do think it's a great time for first-time buyers. I do think that it's also, there are some fantastic opportunities out there for buyers who maybe they have a little bit of a larger deposit than those who do not, because that will really give them an edge with these higher interest rates, and it'll give them a leg up. They're not as reliant on their monthly payments as somebody who was only putting 20%, or if it's under $1 million, 10% down.
Yeah, and that's especially in the $2+ million range. Those are the active buyers right now who are putting significant deposits down.
Absolutely. I think from what I'm seeing, from you said earlier, I have clients right now looking from 500,000 to 3.5 million, and I am seeing more activity in the 2.5 to 3.5 million segment of the market than I am in the entry level condo market.
For sure, but the entry level housing market is a bit of a different story.
Absolutely, that is
anything up to like 1.4, 1.3, and
it's still
pretty aggressive.
Very nuts.
Yeah,
very difficult.
Exactly. Talk to me about interest rates. So, and I know we sort of touched on it earlier, but how are current interest rates affecting behavior? And are you seeing buyers more hesitant? And are all eyes on June 5th? Or are people sort of over it? Or where do you see all of that?
So I think it's kind of 50-50. I think some people are over it and some people are just proceeding as they normally would. And I don't even know if June 5th is on the minds of so many people. I almost wonder if it's the fall or even farther out. I don't think, from the conversations that I'm having and from what I'm seeing, that things will, if there is a cut on June 5th, I don't think that the market will immediately start to take off again. I think a lot of buyers are still very cautious and even a little bit skeptical, and are taking a wait and see approach rather than, okay, June 5th, that's then when we're really going to be able to buckle down and get going.
Right. Because we all know what we all think is going to happen on June 5th.
Exactly. You're the one who said everybody's predicting, including your own, including mine, at the beginning of the year in our podcast, says everything's been wrong.
I don't think it's coming June 5th. I'm now hopefully optimistic for July 25th. That's my working thesis right now, but we shall see. What tips do you have for buyers and sellers right now in this current condition? Like, how are you advising people?
Whether it's a buyer or a seller, you really just have to be in tune with what is happening in the neighborhoods or the areas or the buildings that you are looking to either purchase or sell in. You don't want to it's not a time to necessarily be contrarian. It's not a time to do something completely different. I think there definitely are times for that. But the way the market is performing right now, gather as much information as possible, get on the ground and see as much as possible so that you're not making a decision based on a need or kind of a rushed thought or instinct. You're making it based on quality information that you've been able to compile.
All right, Ruben, thank you so much for joining us. Is there anything else you want to add to this conversation before we sign off?
No, I would say thank you for having me. I think we'll get there. I think just keep on keeping on, and we'll all get through the tiredness of talking about interest rates, and the market will normalize again.
A fine balance of coffee and red wine will get you through pretty much anything.
Exactly.
Ruben, thank you so much for joining us. Always a pleasure. And we look forward to having you on the podcast again.
Thank you very much, Ralph. Have a good one.
And here we have Ian Busher, Fox Marin's resident heartthrob, joining us here today for our continued conversation on the spring market. To be or not to be? Did it actually happen? Did we actually have one? Are we in the midst of one? And if so, did it end and when? So, Ian, thank you so much for joining us today.
Always a pleasure, Ralph.
Always a pleasure to have you here as well, Ian. Okay, so let's get into it a little bit. What key trends are you seeing right now in the market, and how do these compare to what you've seen the past few years? Like, how are things playing out versus the past?
I'm finding that great houses in the right neighborhood continue to do very well. It's almost like time has stopped there. It's continuing in the same way.
Yep.
Mediocre freehold will do okay eventually. Condos are the hardest hit segment, high inventory, many options for buyers, and investors are pretty much extinct except for a rare few, and pre-construction is really struggling. So that's my synopsis of kind of all the categories. How does that compare? A lot of 2023 and 2022 was the same, right? I think we're just floating with that until we see some dramatic change in interest rate news, buyer sentiment. Sellers kind of have their hands tied. And hopefully, if you are a seller, you've got a property that's just off the charts beautiful and you'll do very well.
Yeah, look, I feel like a couple things. It's not normal to have 6,500 condos on the market. That is very atypical for Toronto any time of year. We touched upon that moment, I think, in the fall very briefly, and it looked like the condo market was bouncing back earlier in the year, and then it seems to have just fizzled out. And even low rise, we are seeing, and we talked about this in past segments, we are seeing inventory from April to March really start to build up, and it'll be interesting to see what happens or how May rolls out. But I think we're going to continue to see that. So it is very hit or miss in the low-rise market, which again is a little bit atypical for the spring, where pretty much everything generally sells at a decent price. Mm-hmm. So very hit or miss there. So it definitely is different, and I think that the year started out strong.
Agreed.
And it looked like we were going to have a really strong spring market, but I'm not sure if we ever really had one, just because of the way the market behaved in March and April. And in May, I mean, there's no data right now, but it definitely feels slower than past Mays, at least from my experience and looking across the board for the team and for the market as how performing and how much activity listings are getting, just showings even relative to what we've seen in past Mays.
Yeah, absolutely. And it is funny that these opinions will vary from realtor to realtor. Offline, you and I last week were both saying it really feels like things have dropped off, and a couple of our team members were like, "Oh no, I'm still in the thick of it." So I think it sort of depends on what you're working on, who you're working with, your successes and your failures. But yeah, everybody kind of has a different opinion based on what they're going through right now, I think.
Well, we have listings all across the city, different property types. They're all slow.
Yeah.
And I think no matter who on our team is listing those properties, like that's what we're experiencing. So it definitely is a much slower time than what we've seen in previous springs. But again, we're just talking anecdotally because the data is always lagging and when it comes out.
Yeah.
So what are you seeing about inventory levels right now? Not just in terms of data, in terms of what the market is showing, but in terms of quality of inventory relative to past years and in terms of what's selling and what's not?
It's such a tough question to answer. You know, it kind of goes back almost to the same answer as the first question, which is I took a buyer to see a property on Sunday. It was a strange one because it came out on a Friday, which is a strange strategy. They had open houses over the weekend. It took a bully offer Monday night and sold for $400,000 over asking, but it was pristine. East End, completely finished, basement done. It was not going to need a thing for 20, 25 years. And so it was no surprise that it went to a bully within a couple of days. Those are the ones that are just going to fly right off the chart, like just do very well and sell very quickly.
Question for you. Was the price shocking price, or was it like, that kind of makes sense?
a little from both columns. I sort of, its list price was 126 online. Looking at it, I thought that seems like a high price to be starting at. But then standing in the property and realizing the quality and the extent of the work that was done to it, it's like, yeah, this is an easy where the majority of bidders are going to be in the 1.4s. Will somebody take it to 1.5? And it went for 1.56.
Oh, wow.
Yeah.
Okay.
So for this market, pretty heated. But like I said, I think that's somebody investing in themselves because they're not going to have to do anything to this property for 20 years. So it sort of made sense, but it was a bit shocking for this particular buyer. So there's an example recently of one that kind of, showed very well, did very well, great pocket, great quality. But then, another one, same thing, 1.1, struggling to sell. Every agent's calling to ask for feedback. If they've got a mediocre property because they're concerned, they want to know, almost immediately, what did you think? Do we have somebody? Have we caught a fish here?
That's really interesting. Like how many agents are actually following up after showings, like personally calling you versus past Mays.
Yeah.
Because past Mays, you wouldn't even get a call. No, you couldn't even get a call back if you were calling a listing agent on a property most end of Mays. And now they're calling you and it's like, I have to talk to this agent. We're not interested.
I told the buyer that I took out on Sunday that, she has to remember that sellers right now are nervous. So it's not just buyers who are nervous that they're going to be able to be competitive and get the property, but the sellers are worried, that for one reason or another, people are not interested. They're not going to bring an offer. They're not going to be able to get financing. They're not going to be able to close. There's a level of tension right across the board for everybody, both buyers and sellers. And the buyers kind of need to remember that a little bit, unless it's something like this where a seller can feel very, very confident.
And it's interesting, actually, now that you sort of brought that context up with sellers in this market. This is one of the first markets where when we talk to sellers about pricing, sometimes they are bringing out numbers lower than we're recommending. And that's weird. Like they're saying, I know the market's really soft and I think we should list for this. And I'm like, no. I think we can actually get you more, or we should at least start higher and then have room to go down from there. That again is atypical from conversations that we normally have with sellers, where typically they have much more inflated ideas of values of the home or list prices of the home or list strategies. You're seeing actually sellers again operate at all price points in a much more conservative manner specific to the valuations and ultimate selling prices of their home than we ever really normally see, because they're getting the same information, they're reading the same newspapers, and they're getting this barrage of negative. And if they're selling for reasons that are lifestyle or situational. And so it is another interesting conversation that we're having with sellers that we don't typically have during other spring markets.
That's interesting that those sellers that are coming in with a number that's lower for you, I'm wondering if they are, and maybe you can answer this, savvy sellers who watch the market very intensely and know that if they come out too high to begin with, after a few weeks on the market at that higher price, they're going to start to look like there's something wrong, like a lemon.
I find that more and more buyers and sellers are much more sophisticated. And when they come to you, generally, they've done a lot more research and there's a lot more data and information that's out there, some of which is misleading. But I think we're in such a negative news cycle right now that when people are selling, they're selling for a specific situational or lifestyle reason, which is causing them to need to make a move. When they're coming to us knowing, I know it's not the best time to sell, and I need to sell this for X, Y, and Z. As long as I get ABC for it, then I'm good. So, I'm thinking we should list here. And you're kind of like, well, you're definitely at the lower range of your spectrum. Why don't we try for a little more? Because the market comparables don't really justify selling it for that low, or at least starting out at that low of a price. And we're seeing it on condos. We're seeing it on houses. We're seeing it high end. We're seeing it at all price points where, in my experience, typically where sellers have unrealistic expectations about the values of the home. We're seeing them actually being beyond reasonable, actually dropping their pants a little bit. And we're up there sort of pulling them back up, which is an interesting trend that we don't typically see, especially at this time of year.
I was going to say, I don't actually have that trend. I'm getting calls from potential listings coming up, and those people actually have lofty expectations. So this is going to sound wrong, but it's going to follow your analogy. I have to push their pants back down a little bit as far as expectations and say, yeah, I'm not sure you're going to hit that target, but let's run the numbers and check and let the data do the talking.
Yeah, I find when people actually get to going to market versus like a call to say, hey, I'm thinking about going to market, tunes can generally change, but we're seeing that across the board. So in terms of buyers, what are you seeing about buyer sentiment right now?
It depends on what they're going after, obviously. It depends on why they're buying. Buyer sentiment is, I think, like you're saying, from headlines and other information, wherever they're getting their information. A lot of them are, I wouldn't use the term confident, but cautious. Slow and steady wins the race. Buyers are not looking at jumping into this on the weekend, getting educated, going out to see some places Tuesday, Wednesday, and making an offer the following Saturday. They know that they've got the luxury of being able to sleep on it, potentially, considering it, running the numbers, taking it to the bank, talking to a lawyer, talking to family, maybe doing an inspection of their own, maybe even submitting an offer with conditions that we couldn't do 2.5 years ago. Yeah. So I don't want to use the term confident, but cautious and deliberate is the buyer sentiment right now. And I guess the buyers that are out there realistically are first-time buyers who are seeing an opportunity, saying the interest rates might be a little bit higher. Historically, they're still actually not terrible, but and I'm not going to wait until they come down a little bit and I have to jump into the fray and be one of those buyers who has to buy something, within moments of it coming out. So first-time buyers, and then you were mentioning before buyers who there's something that's happening in their lives, or sellers where there's something that's happening in their lives, and buyers. The other side of buyers who are active right now are people who are stepping up the property ladder and seeing this as an opportunity to, I'm going to take a little hit maybe on my own house, not do as well as I would do in a surging market, but I could potentially get that extra bedroom, that extra floor, that extra square footage, maybe if it's in a condo, for a better deal than I might in a year or two if things start to turn around. Mm-hmm. So all of those buyers are still a little cautious, especially if they have to sell something as well. But I would say they're moving with good intent, but they're moving a little slower.
And how does that compare to past Mays?
I mean, even May of 2022, we were already starting to see the slowdown happening. Obviously, in the height of the market, buyers were just frantic and scared, and I've just got to grab something. The back half of it might be on fire. I don't care. I need something, and I need it now. Yeah. And then in 2022, May, I would say most people were like, let's just wait and see. This just started. May of 23 was actually a little bit of a blip, as I recall, April, May, where we had a little bit of a spring market. This year, the spring market, and I think you'll agree with this, kind of started on January 1st.
Yeah.
And we didn't, it's my opinion that it's started to slow down recently, but from January 1 until probably mid-April, beginning of May, was a bit of a hotspot. Now I'm starting to see it slow down a little bit, the inventory increase. The buyers seem to be disappearing. Showings are slowing. New buyers are tough to come by. So I would say this May, compared to last May, is not going to be as strong, but the 4 months that preceded it kind of took care of that for us. And that's why this May is not going to be as strong.
Yeah, it's interesting that this May, like today, kind of feels like it's mid-July. Like in terms of just the feel of being an agent in Toronto, it feels like it's summer, which leads me to believe that the spring market might be over. But then again, who knows what can happen on June 5th. And, I also think seasonality is starting to leave Toronto real estate the way it used to be. Like pre-COVID, we were very definitive spring market, fall market.
Yep.
Now the market just kind of ebbs and flows based on what other factors are influencing it outside of the market. And so the whole idea of the traditional spring fall market does seem to be less predictable than it had been prior to 2020.
True. I think people are looking at the numbers more than they're looking at the convenience and timing of moving. Maybe for kids, maybe for work, et cetera, et cetera. They're just saying, when does this make more sense from an economic standpoint, rather than when does it make sense so that I can move in nice weather and get the kids started in the new school for next September.
Okay. And sellers pricing homes, we sort of touched on that, but like when you're giving valuations to sellers, like how do you price homes in this market, or even condos, knowing how unpredictable the market is?
We offline, we talked about this for a moment just before we started. I'll be damned if I know. It's a case-by-case basis. Each individual property, be it low-rise or condo, it needs to be looked at very, very carefully. It can't be throw a dart. It can't be guesswork. Agents have got to be very, very strategic about what they're doing and explain that strategy to their sellers and say, this is where I think we should come in, and this is why. And as I mentioned earlier, we don't want to still be on the market in 30 days with egg on our face that we got this wrong the first time around. But sometimes that's just going to happen to you. The best laid plans don't always go according to plan. So pricing, do you do the holding back offers, or do you come out at a decent price and wait and see? How
do you even right now evaluate ranges? Like low rise is so unpredictable. You could have a street apart, similar houses. One blows up, the other one just sits.
Exactly. There is no formula.
Tough. Yeah.
There is no slam dunk formula.
No, I think obviously basing past sales as a basis of valuation is key.
Yeah.
But then you've got to have a pretty wide range.
Mm-hmm. Mm-hmm.
Much wider than we've ever had in terms of possible sale prices, knowing the seller's bottom line, because it is so difficult to predict, and the market can change so dramatically from March to April, from April to May, and God only knows what from May to June. Month to month, it's very difficult.
Yep. I would say even there's a bit of a sidebar here that good agents, cooperating agents, friendly agents, I think are reaching out for opinions of other agents more so, and working with each other and saying, hey, listen, I see you sold this up the street 2 months ago. How was the traffic? Who was in the buyer pool for you? Congratulations on your sale. I've got this coming out. Have a look at it. Have a look at the past listing if you've got time for it. I'd love your opinion on what you think is going to happen here as somebody who just sold on this street.
Yeah.
Or in condo buildings for that matter, right?
Yeah, the way real estate agents and markets should work.
Exactly. Yeah. But there's a lot of that. There's agents cooperating because we're not fighting each other. We're fighting market conditions.
Exactly. Okay, Ian, is there anything else you have as like a summation of what you've seen the last few months, or what you think you're going to see in the next couple months?
Only that I was going to add to your the loss of real estate seasonality. I completely agree with that, and it would be really interesting to be wrong, and for you and I to be on this podcast a month or two from now and say, well, we thought the end of May felt like the middle of July, and now we're in the middle of June or the middle of July, and it feels like the middle of September.
Yep.
So that would be a very, very strange turn of events. But with the way that things are going right now, anything's possible.
100%. There are so many external forces, not that we expect this to happen, but it's possible the Bank of Canada could reduce by 50 basis points, and then the market is back on, or sentiment definitely will have shifted really quickly. There are so many external forces affecting the market. What impact is the U.S. presidential elections going to have on the world, let alone the Toronto real estate market, September, October, November? It's impossible to predict. But it does change from minute to minute, and it'll be interesting to see what June is like. But it does feel, anecdotally speaking, based on all the conversations and activity we're having across the company, that it is starting to quiet, and it is starting to feel like almost summer at this point.
Yeah.
The weather, of course, weighing in on that.
The weather, of course, weighing in on that. But with all of the bad news and negativity and headlines, people going to the cottage and taking advantage of this nice weather is to be expected. So It's going to take something pretty major in the headlines to get this ship turned around and moving very quickly in the opposite direction.
Well, time will tell. Ian, Mr. Ian Busher, thank you so much for joining us
Pleasure.
on this conversation.
Yeah.
Always great to have your input. And we look forward to having you on the next podcast.
Thanks, Ralph. Have a great day.
Okay. Thanks, Ian. Okay, last but certainly not least, in the cleanup designated hitter position, we have none other than Jessica Spillas joining us today to talk about our topic of the day, which is the Toronto spring market. Is it for reals, or was it something that never really came, or is it something that came and went? So, Jessica, so great to have you here.
Thank you so much. It's great to be here.
Awesome. Okay, so let's talk a little bit about this topic. Let's dig into it. Key trends. So what are some key trends in the Toronto real estate market you're seeing this spring, and how do these compare, in your opinion, to past years?
So there's quite a few, actually. For starters, condos continue to be the leader in inventory. I think there's no surprise there. But the other thing that I'm seeing is there's quite a lot of multifamily residences coming online for sale, more specifically triplexes in the freehold asset class. And paired with that, I'm seeing a lot of buyer incentives for those who can close prior to the June 25th deadline, where the inclusion for capital gains taxes rise. And with those incentives, we're seeing discounts as high as $150,000 off the listing price. So there's huge opportunity for individuals who have the ability to close quickly. But the caveat with that is a lot of the buyers that we're seeing that are active right now are not first-time home buyers, but those that are making upgrades to their situation, those who are already in the real estate market. And so they are stagnated with the ability to purchase because they have to consider the sale of their home. And unlike previous years where the spring market has been a shoo-in when it comes to selling your residence, it's not as predictable and there aren't as many assurances right now, and things are typically taking a lot longer to sell. And so that does impact the ability for properties to move quickly. And those buyers who do have the ability to close prior to June 25th, if it is a seller that's an investor, you definitely have an edge right now, and that window is closing very quickly.
Interesting. So I haven't heard anybody talk about multifamily before, specific to the spring market. Can you give me a little more context? I know you had a successful situation where you were representing a buyer. We don't necessarily have to go into that, but tell me a little bit more about this, because it's something that's really not coming out in the press or the media or anything else, but it is an interesting story for sure.
So I had a client who was looking for multifamily residences. We had been looking for about 7 months. So I'd been monitoring this inventory asset class quite closely. And in the last couple months specifically, I've noticed a significant influx in the number of freehold homes. So typically single family, your average semi-detached or detached home in the downtown area that has been segmented or converted to a multifamily or an income residence. And in the past, this has been very difficult to find. And I'm sure part of this is due to the increase in capital gains inclusions. But we're seeing a lot more of that come online. And as a result of that, the price points have been affected relatively adversely from the perspective of the seller as well. Yeah, I think that's all. I'll keep it short and sweet.
Okay, perfect. And any other trends outside of multifamily and the building up of inventory on the condo side? What else are you seeing?
So the other thing that I've noticed is the quality of condo listings specifically has been eroded. And I think the reason for that is because it's become far more challenging to move condos. A lot of listing agents are actually scaling back on their investment into marketing and staging and styling because there's no guarantee of a sale at the end. And this is sort of a backwards mentality, in my opinion, because when markets are challenged, this is the time to double down and really make sure that your marketing and storytelling is best in class so that you can connect with that target audience and stand out amongst the competition. And right now, there is more competition in the condo segment than we've ever seen before. And what's even more interesting is I want to share these stats with you. As of right now, everyone knows that based on the latest stats put out by TREB, the months of inventory in the 416 area is around 2.5 months. Condos specifically, you're closer to 4 months, so we're veering closer to those balanced market conditions. But what's really interesting is that 45% of all active listings right now in CO1, which is, in my opinion, the best sample area because it's so concentrated with condos and it's the largest condo downtown area, 45% of all active listings right now are under 700,000. So that tells us that most of the inventory that we're seeing is that entry-level, one-bedroom, studio type of asset class, which makes sense that those are sitting or not being absorbed as quickly into the marketplace. 2 reasons. Number one, the first-time home buyer is not as active right now. It's almost dissipated. And like I said earlier, most of the buyers that we're seeing in the marketplace right now are those who are already in the real estate market and thinking of moving up or making a lateral move because they're not happy with where they are. On the flip side, we're not seeing the investor buyer being active right now as well because it doesn't really make a ton of sense right now to own a condo based on the interest rate climate and based on the new capital gains rules. So I think a lot of investors are being dissuaded from owning real estate in Toronto, and those that have already purchased are trying to offload those properties now in combination with all of the rules in favor of the tenant and less on the side of the landlord. So there's tremendous opportunity as a buyer in that market segment. Most of the listings, around 406 of them, are listed between 600,000 and 700,000.
And what's interesting about that segment is those are the segments, one-bedroom studios, that are typically owned by investors. And so you're seeing a lot of investors, even with tenanted units, trying to just put their property out on the market and see if they can sell at a half-decent price to get an exit. So it is really, really interesting times in the Toronto market. And did you tell me about the spring market, Jess? Like, was there a spring market? Did it come early? Did it come late? Are we in one? Is it over? What's your opinion on that?
I am personally still waiting for it to start. I think having been used to the spring market in previous years where buyers proverbially had to offer up their firstborn child in order to get a home. I just have not seen that this year. It felt like we were trending in that direction at the end of January, early February. That seemed to come to a halt, especially in the condo sector. I think freehold single-family homes, if you have that quality inventory, it's pretty stable right now. It's moving well. But we're not seeing those shocking sale prices that we've seen in previous years. Everything to me tends to make sense. And there's a certain level of predictability when it comes to that final sale price versus previous years. We've been very surprised and felt a little bit sick about the fact that people would pay certain prices for certain homes that didn't seem to make any type of sense. I am still waiting for that frenzy to occur. I'm not sure that it will. From my view, it feels like a lot of people are waiting to see what will happen in June and July with the Bank of Canada announcement, and they're waiting with bated breath. And I think depending on how that scenario plays out, it will be very interesting to see how the markets react and respond to that. But right now, it seems like we're in a little bit of a holding pattern.
Yeah. I don't disagree. And I was saying this earlier with Ian, it kind of feels like it's mid-July right now in terms of the activity and the sentiment in the market, which is really interesting. And this leads me to another question. Do you think the typical spring and fall markets really don't have that same impact as they do in the post-COVID world? Like prior to COVID, we very much had a spring and fall market. Now there are so many forces, like you were saying, interest rates, et cetera, affecting the market. It just feels like the market is just doing whatever it wants, irrespective of seasonality. And we, as realtors, keep trying to bring it back to the way it always was, which was based on seasonality. What are your thoughts on that?
I mean, I couldn't agree more. I think COVID really shook things up. And it not only changed our day-to-day lives, but it changed the patterns that we're used to seeing in the real estate market. And it feels a little bit like we're in the Wild West right now, trying to find our footing and pick up on the new patterns and trends based on where we're at today. So it'll be very interesting to see if we ever do return to those, the normalcy of the seasonal changes and influxes with supply and demand based on the spring and fall markets. But I think right now we're still trying to find the new norm, and it's impossible to predict where things are at and where they're going to be. But at the end of the day, the fundamentals of the Toronto real estate market do remain. We continue to have a supply problem, and we continue to have an increase in demand, both coming from immigration and population growth, and then also millennials. So I think long term, we're still going to see prices continue to rise and real estate become very challenging to obtain, especially as a first-time home buyer. But right now, things are a little bit topsy-turvy.
And how would you describe, in this topsy-turvy environment, how would you describe buyer and seller sentiment right now?
I think anytime the markets take a little bit of a breather, it tends to fan the flames of discord between buyer and seller expectations, in the sense that sellers still want to achieve these record high sale prices, but buyers have a new sense of entitlement, and they essentially want the world if they are going to go down the path of purchasing. And so what that means is in order for transactions to occur, they become a lot more challenging because there's a lot more back and forth, a lot more dialogue between parties. And sometimes there never is a meeting of the minds. And so we're seeing a lot of purchasers offer on properties very reasonable prices, but sellers are still very stubborn, and they don't take those opportunities when they're in front of them. And they end up shooting themselves in the foot because down the road, as their property sits and develops a stigma, it tends to lose its value. And we talk about this all the time, how buyers, when they see something that's been sitting on the market a little bit longer than usual, their first assumption is that something is wrong with it and that they're missing something that everyone else has already uncovered, and they're afraid to make that first step.
And in this market, more than ever, the first offer usually is going to be your best offer, because it may only be your only offer, and the buyer that's offering on it knows that there's lots of inventory out there, and the reason why they're offering on your property is because it's met specific needs versus payments or affordability, because as we all know, a lot of that is at least temporarily gone out the window.
On the buy side, I am finding it very interesting that a lot of my offer submissions need to be accompanied by a very compelling argument as to why that purchase price makes a lot of sense and is the best that a seller is going to get in most instances, whereas before you kind of just had to put all your cards on the table, basically just attach a little bit of a letter of why your client had a strong financial covenant. But now it's a lot more emphasis on the negotiation aspect of the deal.
For sure. Let's talk about the thing that I am really tired of talking about, interest rates. Tell me about how current interest rates, the current climate, is affecting buyer behavior and sentiment right now with the buyers that you're working with.
Based on the conversations I'm having with my clients, friends, colleagues, everyone is in a little bit of a tight financial position right now. I think that we've been in such a high interest rate and high inflationary time for so long that in the beginning it was manageable, but now people are starting to feel very fatigued by the prices and the cost of living in Toronto. And they're a lot more mindful of their expenses and the financial commitments they're about to make. And because of that, we've seen a lot of people press the pause button on their home search. But in addition to that, I think a lot of people are hoping and praying that we will see a rate reduction soon. And when that happens, that's going to give them the momentum to move forward. But until that happens, people have the mentality, based on what I'm seeing, that why would I make a move right now when I can wait potentially in a couple of weeks, potentially in a month, and get a much lower monthly rate, or potentially get approved for a higher amount and have much more flexibility with my purchase. So like I said earlier, I think we're in a little bit of a limbo, and a lot of people are waiting until they have some assurances from the Bank of Canada in order to move forward with their real estate purchases.
The greatest irony, of course, when it comes to that is the Bank of Canada's and their assurances don't really have a very strong track record, at least over the last 4 some odd years. Okay, well, thank you for that, Jess. And tell me a little bit about how you approach pricing. I know you are awesome with that aspect of what you do. And you seem to be, every time I talk to you, you're pricing another property, either be it on the buy side or the sell side. Yeah. So what's it like in this environment to price properties either for a buyer or seller? And how do you do that? And how accurate can somebody be in this type of environment?
Well, I think the thing to note is that pricing in itself can be subjective to an extent because different properties have different values to different people depending on their experience, their circumstance, and what they're looking for. But when we're talking about the hard data and price per square foot or comparative market analysis that we provide for our clients, I am finding that the spread or the range of value tends to have a much higher delta than it has in previous years or past months because of that level of unpredictability in the marketplace right now. And I think for buyers, I'm putting much more emphasis on the lower or conservative range of value, whereas in previous years, you kind of had to focus on that upper echelon, more exciting price point in order to help them achieve their real estate goals. Whereas today, it's all about what is the lowest justifiable price point that we can come up with. And conversely, on the listing side, it's a lot more complex because you will determine market value, but you also have to have the conversation with your clients about those buyers who don't really care about market value because of where we are in the climate right now. They only care about getting a deal, and that's it. And so I find that in order to set expectations accordingly, that lower range of value, I have to drop it just a little bit to take into consideration those purchasers that are like, okay, this condo is worth $600,000 in order for me to buy it right now because it's a buyer's market according to the news and the media that I'm reading. It doesn't make sense for me to pay market value. I will only make a move if I know in my mind I am getting a quote unquote deal. So factoring that into your plans, I think, is really important. And having those conversations with sellers and saying, listen, if you do have to concede to this lower price point, does it make sense to you? And if not, you might want to reconsider putting your property on the market right now because buyers are being very bullish with what they want, the number of conditions, the purchase price, the closing date. And I think sellers need to be prepared to combat those objections.
I've never seen more conditions in an offer than we're currently seeing in this environment. And that just would have gotten the time of day.
No, I mean, we're working with offers that are conditional on the sale of the purchaser's home. I mean, I've never seen that in the 10 years I've been doing this. And now it's like, sure, no problem. Bring that condition on over. We'll work with it. So it's interesting.
Very, very interesting. Okay, Jess, well, thank you so much for your time today. Is there anything that you'd like to sort of add on this topic? Is there anything you think that would be helpful to discuss before we wrap up?
No, I think we covered it. I talk a lot, so I'll try to minimize it today.
Okay, awesome, Jess. Well, thank you. Thank you so much for your insight and for your sharing some of your experiences in the market. And we look forward to having you on the podcast again.
Yes, likewise. Thank you.